Hello, everyone. Good morning, and depending on whichever part of the world you're tuning in from, good afternoon and good evening to you all. Um, it's been an interesting week so far across the asset we have been monitoring since the beginning of the week. And I hope you're all doing very well. And how are your trades so far this week? Um, Today, as always, we are diving right into the second half of the week. And of course, I'm so excited to be with you to the midweek review of the Forex Morning Mastery, where we shall be um, reflecting on how well the asset we are monitoring so far this week has been doing. And of course, use the information we have both from the chart and from the fundamental factors to make a well-informed trading decision ahead of the second half of the week. And of course, we have been monitoring three financial assets since the beginning of the week: the USOILSPOT, the GBPUSD. The USOILSPOT has done tremendously well since the beginning of the week. In fact, that is the most profitable asset on our watch list for this week. And then we have the GBPUSD, which has really not done too much as price action has not really moved in a particular direction. And finally, my favorite amongst them, the XAUUSD, popularly known as the gold spot. And of course, that one too as well has not really done very well this week as regards to swing trading. But for scalping the market, we did some good bearish momentum yesterday, giving up some significant profit during the go challenge. But besides that, fairly well through the course of the week. And of course, I can tell you for free that the reason why the market has not really gained some traction is due to the expectation of the US macroeconomic event coming up during the second half of the week. Remember, we are looking forward to some labor oriented data, which for those of you who saw the comments from the Jackson Symposium, where the Fed chairman did emphasize that inflation is easing. However, the magnitude of the rate cut will be dependent on the outcome of the labor oriented data. And of course, this week is laced with a bunch of them with the almighty non-farm payroll. So the anticipation of this highly impactful event has influenced the sentiment in the market, where major key players in the market have stepped aside waiting for this data to come in before making any aggressive bet. And this has led to an extended sideways and choppy market condition so far this week. So we are going to be taking all of this into account while we review the current market structure today. And in fact, I do have simple trading setups that we are going to be using to navigate the second half of the week. So I encourage us all to stay tuned in. You don't want to miss out on these ideas. Grab your favorite beverages and stay tuned with me as is together. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very, very excited to have you around with us this morning. And let me quickly let you know, the Forex Morning Mastery is an avenue where it's an educational avenue where we come together 3 times in a week to do follow-up detail on the asset we are monitoring for the particular week. So it usually happens on Mondays, Wednesdays, and Friday. And it's an avenue for us to understand how market participants are behaving, and of course using the historical data we find on the chart to navigate the current market dynamics. So I encourage us all to engage in the comment section. Ask me any questions you want to, or if you need any clarifications as regards to my illustration today, feel free to let me know in the comment section. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do is to keep tabs with the fundamental factors that is expected to influence the sentiment in the market for the rest of the week. And based on the assets we have been monitoring, we're focusing on high impactful event actually from the United States and the United Kingdom economic dockets. However, on days when we do not have any high impactful event, we take into account mid-tier economic features. At least this will give us an insight into what may likely drive the sentiment in the market for that particular day. And if you look at the economic calendar, we did not have any high impactful event on Monday, September 2nd, and we only had the mid-tier, which was the BRC like-for-like retail sales data from the United Kingdom, which came in higher than the previous month at 0.8% expansion in the retail sector. Then on Tuesday, September 3rd, we had the ISM manufacturing PMI, which is a data that gives us an insight into how well the manufacturing sector in the United States is doing. And the manufacturing sector is considered to be a sensitive sector, considering the fact that it's one of the sectors that brings in labor into the economy. It's also the sector that does production. And the PMI data, like you all know, is 100, where anything below 50 is considered as negative, as that reflects a contraction in that sector, and 50 is considered as an expansion in that sector. And of course, look at what we had here for the ISM manufacturing PMI. The data for the previous month came in at 46.8. Market participants were looking forward to a little bit of increase to 47.5, but the data that came in shows that the manufacturing sector is still struggling. As you will see, the data came in at 47 points, and this obviously isn't a good signal for the US dollar, especially when everyone is already leaning towards a potential interest rate cut. Now, fast forward to today, Wednesday, September 24th, we do not have any high impactful event to look out for, but we have some media economic features that could influence the sentiment in the market today. And of course, one of them, which is the major one I will be deliberating and I will be looking forward to, and that is the JOLTS job opening. Now, the JOLTS job opening is a labor-oriented data, which will be giving us an insight into the job vacancies in the United States. And it collects data from employers, including retailers, manufacturers, and different months, published by the U.S. Bureau of Labor Statistics. And the higher the data here will give us an insight into how robust the U.S. labor market is. And this is one of the criteria that the Fed chairman is looking forward to, the Fed team is looking forward to decide what the magnitude of interest rate cut will be for next week. Then no major event except for the speech from Beige Book. We have this Beige Book is a financial talk show where Fed officials speak, and then market participants try to gain some insight into the economic outlook and future policy decisions from the Federal Reserve. Now, another thing I would like to elaborate on here, since we are not going to be running the Forex Money Mastery tomorrow, we are going to be looking forward to the ADP employment change, another labor-oriented data, and of course the ISM services PMI into the health of the service sector in the United States. So these are events that will influence how market participants will behave today. So, and then we are looking at the average hourly earnings on Friday and non-farm payroll reports. Now, how does this influence the sentiment in the market today? Well, due to this event coming up, we are less movement in price action. So if price moves in a particular direction, there is a high chance that price will retrace back into our entry point. Now, what this simply means is that whatever decisions we are going to be making today, let's ensure that we are around to move our stop losses accordingly, securing our position so that we don't get caught up in these potential choppy market conditions that are bound to happen due to the expectations of this event. So with that being right into the business, let's look at things from a technical standpoint. So the first asset we are going to be looking at today is the USOILSPOT. This is one of the most profitable. This is the most profitable asset on our watch list for this week, as we have joined a bearish move since yesterday's early hours, breaking down both the key level and the support line of that range bound structure, and currently we are running with over 300 pips in profit at this point in time. And if you remember vividly, at the beginning of the week, we were looking at the opportunity of buying this asset. We actually bought at the breakout of the $73.60 level after identifying a range bound structure where price during the first 10 to 12 hours was confined within the $73.60 level and the $72.85 area, where we were looking out for either price breaking out of the resistance line to give us an opportunity to buy, or breaking down the support line to give us an opportunity to sell. And of course, as you will see, price did break out of that structure on Monday morning, and for those who missed out on that opportunity, retest the structure, continue to the upside, but here at the $74.30 level. So price only moved about 70 pips thereabout on Monday. And of course, if you had moved your stop losses accordingly, you must have been taken out with a modest size of profit, or worst case scenario break even. And this is subject to where you actually moved your stop losses to. And for those of you who saw my commentary yesterday morning on my Telegram platform, I did updated the structure where I identified two features here that will be guiding our decisions for yesterday's session. And one of them is this ascending trend line after capturing the series of higher lows since the beginning of the week. And you know how we treat our ascending trend lines. As long as price remains above them, we will be looking out for patterns and structures that support the idea of buying. And the second feature here was this temporary demand zone, where we saw that since price broke out of that resistance line, we have seen how that area had become a potential platform that could incite buying opportunities. So as a result of this, I included this resistance line here, saying that if price breaks out of the structure, we will continue the uptrend move. But unfortunately for buyers, that never happened. Price did not even come close to that structure, negating the bullish buyers, and instead we saw price break down that ascending trend line and that temporary demand zone with this engulfing bearish candle, giving us a signal that that bullish platform wasn't strong enough to maintain that uptrend scenario. So as a result of this, we were positioned right below the $72.85 level, just like I have indicated here, to join a bearish move. And for those who did not have a sell stop order below the structure, you can see the market came back, retest the structure, and look at what happened. Price continued to nosedive. And as a result of this, we currently have a minimum of 300 pips in profit at this point in time. And if you saw my commentary this morning, I did mention that we should be moving our stop losses to secure the current sell position. And if you had done that, you must have been taken out of this position. Personally, I have been taken out of this position, but if you are yet to, I would advise that you close all sell positions right now, as we begin to notice bullish traction happen in the last couple of hours. And for those of you who saw my commentary this morning, you'll see I have a new structure here that will be helping us navigate this current market dynamic. We have the $69.80 level, a new structure I identified this morning, which beautifully shares a confluence with the let me share with you what things are looking like on the 4 hours time frame. It has a structure that lines up exactly with the support line of the descending channel we identified on the 4 hours time frame. Remember, we had this support line right here, and look at how immediately price tested the support line. We saw a sharp rejection, which was followed by buy pressure from that particular area. So the question at this point in time is, will price respect that support line to push price to the upside, or are we going to see that support line broken to the downside to incite a sell-off? Now, before we go into the details of these technical details, let's quickly look at the fundamental factors that is influencing the sentiment in this particular market. And for those of you who saw my commentary this morning, you would have gotten an idea into this, but let's quickly run through what market participants are actually looking at. Now, we talked about the OPEC Plus production increase, where I did mention that oil prices are going to drop due to the Libya, where they are, which was largely driven by the potential resolution of a political dispute in the country, and concerns over slowing global demand growth. Very, very sensitive in the last couple of days, as the two legislative bodies agreed to jointly appoint a central bank governor, which could ease the conflict over control of the country's oil revenue. And this agreement may restore maybe about 500,000 barrels per day back into the market, increasing the supply into the market. And of course, you know, when supply increases, what happens? Price tends to drop, of course, and price had dropped significantly in the last couple of days. Then another factor behind the scenes that is influencing the bearish sentiment in the US oil spot is the slowdown in the Chinese economy. China's was published 2 days ago, I think, and in fact we saw data showing figures lower, in fact the lowest one in the last 6 months. And for us, this is not a good signal for the crude oil market. You know, China is the largest importer of crude oil in the world, and whatever happens to the Chinese economy, positively or negatively, will influence the sentiment around the crude oil market. So if the economy is not doing well, it is expected that there will be reduced demand for crude oil from the global market, which definitely will affect the buying potential of crude oil. And of course, this has also prompted Chinese policymakers to consider increasing stimulus measures for households. So it's not looking rosy for the Chinese economy, and this obviously has further increased the bearish pressure in the crude oil market. Now, another factor behind the scenes is the decision by OPEC Plus to increase their production for the next quarter. And as I did mention, I think I talked about this on Monday, that OPEC Plus is set to increase oil production by 180,000 barrels per day starting in October, and this is going to be adding further pressure on oil prices as the market anticipates more supply. Now, if we look at all of these various factors or these major market drivers behind the scenes, you would agree with me that the path of least resistance for crude oil is looking very, very bearish. However, In as much as we're looking out for selling opportunities or bearish potentials in this market, we cannot ignore the potential that buyers can also come into play. Now, the reason why I have said this now is when we go into the technical structure on the chart, as you will see here, theoretically speaking, whenever there is a strong impulsive bearish leg, like you see, it could be to the upside or to downside, at a point in time, there is a tendency for profit-taking activities to happen, which could result into a retracement move, maybe back into structure or into the golden zone area of the 50 to 78.6% of the previous impulse leg in an attempt to continue the downtrend move. Now, the question here is, if bullish momentum begin in the next couple of hours, like we have seen right now, how far will it go before the bearish trend continues? Well, we have a couple of structures here to work with. Remember, price action did break down our key level yesterday, as you will see here, and there is a high chance that price could come back into the structure to retest it in an attempt to continue the downtrend move if we cite selling pressure around that area. Then another way to project where price may likely end this retracement move is by using our Fibonacci retracement tool, running it through the previous impulse leg, as you will see here, and aiming at an area between the 50 and the 78.6% of that previous impulse leg. And if we do that correctly, we are going to be looking at something like between the $71.80 level. So let me just put that in, $71.80 level, and we have the $73.25 level. Okay, so we have the $73.25 level. Now, this area will be a sell window and a potential TP target for those who have bought the $69.80 level. Personally, I have a buy position triggered already on the USOILSPOT at the break above of the $69.80 level, and we're looking at a minimum of 200 pips to a maximum of about 350 pips, depending on where the retracement phase culminates. Now, our center of focus for today is around the $69.80 level, which beautifully shares a confluence with this trend line, this descending trend line right here. And remember what I showed you on the 4 hours time frame, it's sharing a confluence with that support line of the descending channel we identified on the 4 hours time frame. So this area we have right now is a crucial juncture, and of course you can see the character of price action in the last 4 to 5 hours has shown us signs of a potential consolidation around that particular area. So depending on how the market reacts to the structure will determine if we are going to be buying or selling. So at this point in time, like I did say, price has broken out of this descending trend line, broken out of the $69.80 level, triggered a buy position, and of course we do want to see how far this bullish momentum will go. Now, for those of us who had missed out on this breakout of structure, let's see if the market at some point will come back, retest the structure, and if it does, the appearance of buy pressure on our lower time frame above the $69.80 level will be all we need to confirm that uptrend move, and then we can actually join. And depending on how aggressive you are, you want to be putting your TP target between the $71.80 level or the $73.25 level. So this is subjected to you and what risk reward ratio you are looking at. Now, if price continues to climb and goes into the structure, then if it gets into this window, we will be looking out for reversal setups like continued selling pressure, evolving into either a double top structure, head and shoulder pattern, rising wedge, depending on whatever we have there. Then we mark out the neckline and of course sell the breakdown retest of that neckline to join the the downtrend continuation. So let's see how the market is going to play out around this particular area. Now, in as much as we maintain a short-term bullish bias at this juncture, we cannot ignore the potentials that sellers could still take over, and then this old breakout could turn out to be a false breakout. Now, if this is going to be the case, then I would only consider selling if price drops below this trend line, like something, let me give a visual representation, something like a breakdown retest where continuous selling pressure shows signs that buyers are finding it difficult to maintain above the $69.80 level, and price remains below the descending trend line and of course the support line of the descending channel we identified on the higher time frame. Then we can feel comfortable joining the downtrend continuation. So you can see how crucial this juncture is. So depending on what happens here, let's see the next couple of hours, and if something new comes up along the line, trust me, I will be giving us updates on both my TradingView and Telegram platform. So this is my simple idea on the USOILSPOT for today's trading session, and of course let's see how the market is going to play out around this area. I encourage us all to mark out these levels, the structures accordingly on your chart, as they will be playing a significant role in guiding our independent trading decisions. So this is my simple view. If you have any questions, feel free to let me know in the comment section. So waiting for your comments or questions. I will be taking the next 10-15 seconds off while I wait for your comments, and if there are none, we'll go ahead to the second asset on our watch list for this week. Stay tuned in, guys. All right. So in the absence of no questions, I'll take that as a confirmation that we are all on the same page. I hope you've marked out this level so I can take off the screen, and let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, as you will see, the risk of sentiment in this market has projected a cautious market mood ahead of the key US economic event that we are looking forward to this week, which is potentially dragging the GBPUSD lower. But within this lower structure, we are seeing price action going into a choppy market condition. So as a result of this, we've not really gained something significant on the GBPUSD so far this week. Remember, we were buying at the beginning of the week. The buy position, the first one closed at break even, while the second one closed at a stop loss. And of course, we had a sell position triggered yesterday, which also for me closed at break even. Now let's look at what the structure is saying here and what we did identify on Monday's session and it's played out. So at the beginning of the week, the first 12 hours showed that the market was consolidating, confined within the 1.31385 and the 1.31200 area. That was our key level prior to the beginning of the week. Now, with a consolidation phase like this, you know how we treat our range bound structure here. We want to exercise patience, allowing the negotiation between buyers and sellers manifest and mature, and this will usually result into a trading signal which reflects on the chart as either a breakdown of the support line to welcome selling opportunities, or the breakout of the resistant line of that range bound structure to welcome buying opportunities. And of course, we saw the market broke out of the resistant line multiple times, giving us the idea that price will continue to the upside. If you remember vividly, on the higher time frame, we had a trend line which captured all of the pivot lows at the beginning of the week. So this trend line from the 4 hours time frame is what we're seeing right here, and this was a very good signal for us to maintain that bullish bias. But you know, the market does not do what we expect all of the time. It does its own thing. We saw price break back down. We saw the second buy position, but it didn't do very well, stopped out of that position in the loss. And then remember what I told you on Monday, that we are not going to be selling unless we see price break down, retest this 1.312, which was finally achieved yesterday, as we saw this engulfing bearish candle taking over the market. And after moving stop losses to break even, the market came back into entry point, taking us out of that sell position. So at this juncture, things, you can see the market has been very, very choppy, and there has been a lot of factors behind the scenes that is influencing the sentiment in the market. Now, we've talked about the risk of sentiment surrounding the interest rate expectation, and then we also have the ISA manufacturing PMI data that came in yesterday, which came in at 47.2, not as good at what as market had expected, and not as good as the previous month data. And it is expected that with this data, the US dollar is supposed to drop, which did not happen yesterday actually, for me, which was a surprise. Then another factor behind the scenes here, which I expect should favor the British pounds, is the Fed rate cut expectations. And according to the CME Fed Watch tool, as at this morning, there was a 61% chance of a 25 basis point rate cut and a 39% chance of a 50 basis point cut at the Fed's meeting next week. Now, for me, this is a very good signal for a bullish potential for the GBPUSD. And though we saw the US dollar try to gain some traction in the last couple of days, but I doubt if this momentum will be sustained, considering the sentiment surrounding the interest rate decision. And of course, remember last month the Fed chairman during the Jackson Hole Symposium indicated that it is time for monetary policy to adjust, suggesting the likelihood of easing during next week's interest rate. Is it next week or 2 weeks time? I think it's between 17th and 18th. That's 2 weeks time, I guess, meeting, which could weigh on the US dollar in the near term. Then he also went on to further say that labor-oriented data will determine the magnitude of the interest rate cut. That is, if the labor data shows resilience, then we might be seeing a 25 basis point cut. But if it doesn't, we might see as large as 50 basis point cut. Then on the UK upfront, at this point, the week lacks any top tier economic features from the United Kingdom. So this week is going to be influenced by the US dollar dynamic, and of course it could underpin the British pounds. and especially when there is no major economic data released from the United Kingdom. So for me, I still hold on to a bullish bias on the GBPUSD. Let me show you what things are looking like on the 4 hours time frame before we go into the details here on the 1 hour time frame. Remember, this is what we saw on the 4 hours time frame on Monday. We saw, after taking into account the trading activity since the beginning of the month of August, it was quite clear that the market was on a bullish run, and we had a couple of ascending trend lines supporting that bullish bias. Now, with the way things are going and price still staying afloat of our ascending trend line, it makes a lot of sense that we continue to look out for patterns and structures that support the idea of buying. Now, going back into our execution time frame, that is the 1 hour time frame, remember that we had our key level. Hold on a second, I think I'm hearing an humming sound from my mic. Okay, so going back into the 1 hour time frame here, remember our key level is at the 1.312, and you know how we use our key levels. Of course, as long as price remains above them, we want to be looking out for patterns and structures that supports the idea of buying, and we will not consider selling unless price breaks down and continued selling pressure happens below our key level. Now, our key level is right here. I already have a buy position triggered already after price breakout of this key level this morning. For those of you who saw my commentary on the GBPUSD, you will see I placed some arrows here showing buy bullish signal, had a breakout of the 1.312, 1.31385, and of course the 1.31600 area to maximize the potential of that bullish move. Now, another thing that is helping me feel comfortable in a bullish idea here is this descending trend line we have here. Now, this descending trend line has been holding bearish momentum since in the last 1 week, and this is giving me a form of retracement which appears to have ended, as the breakout of this descending trend line will be a good confirmation for me to continue an uptrend scenario. And of course, we've seen price break out of the structure, and we might still likely see a form of retest happen later in the future to confirm and build up some strength for buyers to push price further higher. So at this juncture, and as long as price remains above this descending trend line, I want to be looking out for patterns and structures that support the idea of buying, and our stop losses will be way below that descending trend line. So we are looking at a minimum of 20 pips to a maximum of 25-30 pips, depending on where your entry point is. So I maintain a bullish bias at this juncture, and in fact, if you look at what has been going on here in the last 18 hours, you can see the lowest point this week is this area at the 1.3090 area, and ever since then, every attempt by sellers to break down the previous low has failed. As you will see, price has been finding higher lows in the last 18 hours, and this morning, look at what we have here. So it's more like price building bullish momentum behind the scenes. So I still think the path of least resistance for the GBPUSD remain bullish, where I look out, I maintain a bullish bias above this descending trend line. However, if price action decides not to continue the uptrend move, you know the market is an uncertain environment. We can hardly predict the next move. We only use structures as an edge to manage our sentiment as regards to trading decisions. So if the market decides to go lower, what are the conditions that will make us feel comfortable selling the GBPUSD? Well, if you would ask me, I would rather want to see price break down the lowest point for this week, which is at the psychological level at the 1.30900 area, which I am highlighting right now. So let me just label it 1.30900 level. So we have that level right there, and it will only make sense that we sell if this level is broken and retested. And why is that so? Well, look at the structure here. Look at that ascending trend line we talked about on the higher time frame. Look at how beautifully it shares a confluence with our trend line. And you know, as long as price still remains above this trend line, it makes a lot of sense we maintain a bullish bias. But if this structure is broken, look at what a beautiful confluence we have there. And in fact, price will be below this descending trend line that has been holding bearish pressure in the last 1 week. So for me, the only area that will make me feel comfortable selling the GBPUSD is for price to breach the 1.3090 area, find selling pressure on my lower time frame, then join that decline to the downside. So it's a simple setup we have here on the GBPUSD, and like I did say earlier, I already have a buy position triggered, which is currently running with about just 2 to 3 pips in profit at this point in time. So if you had missed out, you can still join. It's still very close to the entry point, and let's see if we can see the 1.31385 and the 1.316 broken to maximize the potential of this bullish move. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10-15 seconds off, allowing you to mark out those levels on your chart accordingly. And probably you have any questions or you need some further clarifications, let me know in the comment section. So see you around the next 15 seconds from now. Cheers. Hello Saeed, good morning to you. I'm very well, thank you. Trust you are too. all right, so in the absence of no further questions, I want to take this as a confirmation that we are all on the same page. I hope you've marked out the levels accordingly, and on that note, let's move on to the final assets on our watch list for this week. Stay tuned in. So the final asset we are looking at for this week is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And on the gold for this week, from the swings trading approach, we have not done very well at all for this week, but from the scalping approach, we were able to scoop in about 15 or 10% of the account side on the go-go challenge yesterday. And in fact, the old bearish sentiment surrounding this market is coming to me as a surprise. There are various factors behind the scenes which actually could have boosted the gold commodity, like the global sentiment. We have the market sentiment turn negative after a global sell-off driven by weak US manufacturing data and fears about potential burst in the artificial intelligence tech bubble. And this was a whole scenario that happened within the last 18 hours. And for me, I was expecting that this will further boost the safe haven asset gold, but surprisingly, gold continues to decline. And despite its safe haven status, gold failed to gain traction, likely due to the heavy long positioning by CTA traders and institutional investors who had already priced in the sentiment surrounding the federal interest rate decision way ahead of time. Now, will this bearish momentum continue? For those of you who saw my commentary this morning, I did mention in that commentary that I would like to see how the market is going to be reacting to this temporary demand zone within the 2,473 and 2,475 dollar area to determine if we are going to be continuing the downtrend here, or it could serve as a platform to incite a new bullish potential. And as a result of this, I told us all that the sell position we had, that we should move all stop losses to secure it, and I hope you have done so. At the moment, look at the structure we have here. This was what we were looking at the beginning of the week. We had a range bound structure where price was confined within the 2,504 and the 2,490, just around our key level had the 2,500, and both attempts buying the XAUUSD did not do very well. As you will see, we got stopped out of that buy position yesterday following the US manufacturing PMI data, which was surprising that price even dropped to the downside, as you will see here, triggering a bearish potential. And remember, we were not looking to sell the the XAUUSD except a breakdown retest of the 2,490 happened, and if you took advantage of that move, we saw price move over 160 pips before this bullish traction resumed around this 2,473 area. Now please remember, move your stop losses accordingly on your current sell position, as we might be on the verge of another wave of bullish momentum from this particular area. So I personally moved my stop losses to around the 2,484 483 area, just about 50 pips thereabout, and let's see how the market is going to play out. However, before we go further into the technical details, let's look at the fundamental factors that are influencing the sentiment in the market. So I've talked about a couple of them earlier. I've talked about the global sentiments as regards to the risk off, which resulted in that global sell-off yesterday. We talked about the Fed interest rate cut expectations. We also talked about the key US employment data coming up later in the week. In fact, we are looking forward to the labor-oriented data that will be giving us clues into what the magnitude of interest rate cuts will be in 2 weeks' time. So we are looking at the JOLTS job opening, which is coming up today. We're also looking at the ADP employment change report coming up tomorrow, the jobless claim, which is also coming up tomorrow, and of course the almighty non-farm payroll coming up on Friday, and of course the average hourly earnings coming up on Friday. All of these are labor oriented data, and this is the Fed wants to know if the labor sector is still resilient or not. Now, if it's still resilient, if the data comes in higher than market had expected, we may likely see a 25 basis point a 50 basis point cut. But if it comes in lower than market had expected, or with no surprising discrepancy, then we are likely going to see a 25 basis point cut. So that is that as regards to that one. The fact is, we are looking forward to a rate cut in 2 weeks time, but we do not know the magnitude of the rate cut, which will be subject to what the labor data are saying. Then besides all of this is the geopolitical instability. We are looking at the Russian-Ukraine war. We are looking at the Israel-Lebanon-Israel-Hamas situation, which further increases the appeal for safe haven assets such as gold, copper, silver, and the like. So this kind of geopolitical tensions normally favors safe haven asset, and for me, this is one good reason to look out for buying opportunities around the gold market dynamics. So these factors combined are shaping the current market outlook and gold's unexpected performance. But at this point in time, what are the chances that both buyers and sellers have here? Now let's look at things from a technical standpoint, which will be revealing to us how the market participants are digesting this contrasting information. Now, if we look at the chart right here, you will see that in the last 3 days, of course, market has been finding lower lows and lower highs, and this is further emphasized by this descending trend line after capturing the series of lower highs. Now, another thing you will notice here is that price had already broken down that ascending trend line we identified on the 4 hours time frame. Look at what happened here. Price has broken the trend line, as you will see, broke it, retested it, and since then it has dropped significantly to the downside. Let me show you what things are looking like on the 4 hours time frame. We talked about this in my weekend market analysis video, so I will just scale up into the 4 hours time frame. So look at what we have here on the 4 hours time frame. After capturing the character of price action since the beginning of the month of August, we had a beautiful ascending trend line which appeared to have been broken to the downside. But for me, I'm not going to be seeing this as a significant signal to join a downtrend move. Actually, the reason why that is simply because of this 2004.75 level. And if you remember vividly, about a couple of weeks ago, we were using this 2004.75 level as our key level. And one thing about that level is how it had played a significant role in determining the direction of price action throughout the month of August. Now look at what happened here at the beginning of August. It was serving as a strong selling niche, as you will see here, and every attempt by buyers to break through that structure in the last throughout the first half of the month of August failed. As you will see, selling pressure continued to negate all bullish attempts, and not until mid-month of August we finally saw price break out of that structure. And remember, it went to hit an all-time high record at the 2,532, and since then you will see here that the market had maintained bullish momentum above that 2,475. And yesterday, despite that strong bearish momentum we saw, we can see here that as soon as price got into the 2,475 area, we saw buy pressure resume from that particular area. And in fact, the last couple of hours now has shown that buyers are still trying to take over the market from this particular area to push price to the upside. So for me, this is a robust demand zone that has a memory for buying power. So what I will be looking out for right now is to see how the market is going to react to the structure, and this will determine if we are going to be buying or selling. Now, one thing I want to tell you here is if this level gets broken to the downside, that is broken and retested since selling pressure on our lower time frame, we are likely going to see a massive sell-off, as this will be the first time price will be breaking down the structure ever since it broke above that level. So I will continue to monitor price action around the 2,475, and depending on what happens here will give me an idea of how to manage this position. Now let's scale back down into the 1 hour time and let's look at what things are looking like on our execution time frame. Now scaling back down into the 1 hour time frame, so what do we have here on the 1 hour time frame? What's happening to my structures? I cannot find them anymore. Okay, I guess the chart is still loading. I guess, okay, yeah, it's still loading. So we are back into the 1 hour time frame, and remember I mentioned that for those of us who have a sell position, let's move our stop loss. I hope you have done that right away, as we could see buy pressure resume from this area anytime soon. So this is why I did identify a temporary demand zone around this point. Now you can see buy pressure has resumed, and this candle here still has about 12 to 13 minutes to close. So let's see what is going on the 15 minutes time frame. If we can identify a reversal pattern, maybe in the form of a double bottom structure, then we could look out to buy this asset. So at this point, I'm beginning to see that a reversal pattern on the 15 minutes time frame has matured already, as you will see right here, and buying above the 2,476 is looking very promising at this point. So let me mark out this level we have $2,476.50 area. So $2,476.50 level right here on the 15 minutes time frame. So I would just like this one to only show on the 15 minutes time frame, and this is going to be suitable for those of us who are keen on scalping this market, those who have small size account size, who do not have that size that can take a stop loss of about 100 pips thereabout. So I personally have missed this one as regards to scalping, but let's see if the market will come back, retest the structure, and if it does, we want to be part of that uptrend move from that particular area. So this is what I will say here at this point to join an uptrend scenario from this particular area, and I guess the next couple of hours will give us an insight into how the market will evolve around the structure. So I would still like to see price retrace back into the 2,476, 2,476.50 level. Then I look out for buy pressure, then I can join that uptrend move from that particular area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us update if we miss out, if this does not retest structure and something new comes up. I will definitely let you know in the comment section. Now, in as much as we feel confident that buyers are gaining traction around this area and the path of least resistance for gold still remains very bullish, don't let us get too carried away with this idea and forget the potentials that sellers can actually come into play. And if we are going to be joining a bearish momentum from this particular area, I would like to see price break down this temporary demand zone, take out all the buy positions around this area, retest it, gain some liquidity to continue that decline to the downside. So that is the only condition that will make me want to continue the bearish position at this point. And for those of us, remember, that have a buy position running, please move your stop losses as buying pressure appears to be evolving at this point in time. And for those of us who are part of the go challenge, we are going to be running this scalp. We are going to be scalping this market today again. So I look forward to seeing you guys as we scalp through this correct market structure. So we will be starting the go challenge in the next 20 minutes thereabouts. So stay tuned in on that particular one. So this is my simple view on the XAUUSD for today. I hope I made myself very clear at this point. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we round off today's Forex morning mastery session. See you soon. So I see your comment here from Sahid Nasir. How are you, sir? That please explain levels in 15 minutes time frame for scalping. I did explain. I guess that comment came in before I did. I hope you were around to see that. And he also mentioned here that if 2,475 works as a strong demand zone, then for how long will it take to go up? Now, that is a question that I usually refrain from answering because no one knows how far any price level will go or how low any price level will go. No one knows, not even the fund managers or the central bank bankers know. Now, one thing we usually do in this case scenario is to have structures that will guide this projection. So we usually use Fibonacci extension tool in some cases, and of course we also use our key level support lines and resistance lines to guide these ideas. Now it depends on what kind of trader you are. Are you a long-term trader? Are you a short-term trader? If you're a long-term trader, you want to be looking at long-term positions where you want to have position running for days in the market, and hence you have a bigger TP target. But if you are a scalper, you want to be having a short-term TP target area, maybe 100 pips, 50 pips, 60 pips, depending on how your trading style is. Now, in this case scenario, as you will see, buying from this particular area, depending on what kind of trader you are, if you had bought around this temporary demand zone, you could be having your TP target at the 2,490, which lines up with that descending trend line, and that's about 160 pips. And you could have it as far as the 2,500, 2,504, or as far as the highest record price action has been at the 2,530. That's about 500 pips or more, and this is more or less for a long-term trader. So at this point, we can't say for sure where price is likely going to go, but one thing we usually do to manage our position is when price moves significantly well in your favor, you move your stop losses, you secure some of the profits, and you continue to move your stop loss as price moves in your favor. And if possible, you want to maximize the potential of the move, you can then extend your TP according to how the market is moving. So that's the only way I can explain that to you. No one knows how far or how low price will go, but you have an edge using your structures and technical tools to guide this projection. So I hope I made myself clear there, Saeed. All right. You're welcome. Love you too, Saeed. All right, so it's on this note, I guess we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I really do appreciate every single moment. I thank you for your support. Thank you for your likes. I really appreciate them. And so far today, we were able to attend to all of the instruments we are monitoring so far this week, including the USOILSPOT, which has done tremendously well for us this week, and we are looking forward to build on that profit on that one. And the GBPUSD, which is still struggling to gain some traction, and of course my favorite, the XAUUSD, which we are going to be looking at. We're going to be scalping that for the Go Challenge viewers. So I hope we all marked out these levels accordingly on our charts as we've illustrated. I hope you've done so. If you have done so, well done and kudos to you. And for those who joined us for the first time today, I hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions. As the more time you spend with us in this community, the better you get to understand my analytical approach, and in fact you can use my ideology to improve whatever trading strategies you have adopted. So I look forward to seeing you all same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the last trading day of the week, which promises to be another opportunity for us to capitalize on strong volatile moves. So it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Go traders, I will be seeing you in about 20 minutes from now. Bye bye. And we are looking forward to build up that profit on that one, and the GBPUSD, which is still struggling to gain some traction, and of course my favorite, the XAUUSD, which we are going to be looking at. We're going to be scalping